You think you're managing money responsibly. You pay your bills on time, you don't carry massive credit card debt, you've got some savings sitting in an account somewhere. You're doing fine, maybe not great, but fine. And yet wealth isn't building the way you thought it would. The gap between where you are and where you want to be isn't closing. Meanwhile, people who seem less careful, less responsible, less financially conservative than you are somehow accumulating more. Here's what's actually happening. You're making mistakes you don't even recognize as mistakes. Small decisions that seem harmless, even logical, that are quietly draining thousands from your future wealth. Death by 1,000 cuts, except the cuts are invisible and you've been told they're normal. The wealthy avoid these traps not because they're smarter, but because someone taught them what to look for. Today, I'm showing you exactly what you're missing. 20 money mistakes you don't know you're making, and more importantly, how to fix every single one. Let's get into it. Mistake 1, keeping emergency funds in a checking account. You've been told to have emergency savings. You listened. You built a cushion, except it's sitting in a checking account earning 0 interest while inflation eats 3% of its value annually. A $10,000 emergency fund loses $300 in purchasing power every year just sitting there. High-yield savings accounts pay 4 to 5% in 2026. Same liquidity, same safety, actual growth instead of guaranteed loss. Move it today. Mistake 2, not tracking subscriptions. $15 here, $12 there, $9.99 for something you signed up for 2 years ago and forgot existed. The average person pays for subscriptions they don't use totaling over $200 annually. That's money disappearing monthly for services delivering 0 value. Audit everything. Cancel ruthlessly. Redirect that cash to investments where it compounds instead of evaporating. Mistake 3, paying bills manually instead of automating. You think you're being responsible by manually reviewing and paying each bill. What you're actually doing is creating opportunities to pay late, incur fees, and damage your credit score. One missed payment can drop your score 100 points and cost you thousands in higher interest rates over time. Automate minimum payments for everything. Review spending separately. Never risk penalties for the illusion of control. Mistake 4, ignoring employer 401k matches. Your company offers to match your 401k contributions up to 5%. You contribute 3% because money's tight. You just refused free money. A 100% instant return that requires nothing except filling out a form. If you're not maxing the employer match, you're leaving thousands on the table annually. Cut lifestyle spending before you skip this. Mistake 5, waiting to invest until you understand everything. You're researching, reading, learning about PE ratios and market timing and sector allocation. Meanwhile, years pass and your money sits in savings earning nothing while the market average is 10% annually. You don't need expertise to invest. You need an index fund and automatic monthly purchases. Waiting for perfect knowledge costs more than any mistake you'll make by starting simple. Mistake 6, keeping your entire net worth in one bank. You think loyalty matters. You've banked at the same institution for a decade. They know you. Except they're paying 0.07% interest on savings while online banks pay 5%. They're charging monthly fees while competitors offer free accounts. Banks profit from inertia. Your loyalty costs you hundreds annually in lost interest and unnecessary fees. Diversify. Use the best tool for each job. Mistake 7, financing depreciating assets. You financed a car because the monthly payment seemed manageable. That car loses 20% of its value the moment you drive off the lot. You're paying interest on an asset that's actively losing value. The math works against you twice. Buy used, pay cash, drive reliable instead of impressive, redirect loan payments to investments that appreciate instead of depreciate. Mistake 8, not negotiating your salary. You accepted the offer as presented. Maybe you negotiated once years ago, but you haven't revisited it since. Every year without a raise is a pay cut once you account for inflation. Every initial salary you don't negotiate costs you exponentially over your career because raises are percentages of base pay. $10,000 more at higher becomes hundreds of thousands over decades. Ask. Always. Mistake 9, carrying a balance to build credit. Someone told you that carrying a small balance helps your credit score. That's completely false. Credit scores care about utilization ratio and payment history, not whether you pay interest. Carrying a balance just means you're paying 18 to 25% APR for no benefit. Pay the full statement balance monthly. Your score improves and you keep the interest. Mistake 10, buying new when used is identical. You buy new books, new tools, new furniture, new electronics at full retail price. Meanwhile, nearly identical used versions exist at 40 to 70% discounts. The functionality is the same. The value to you is the same. The only difference is you pay double to be the first owner. Buy used for anything that depreciates. Save the difference. Mistake 11, not using cashback and rewards strategically. You use a debit card for everything because credit cards feel risky. You're leaving 2 to 5% cashback on the table for every purchase. Someone spending $3,000 monthly loses $1,500 annually in rewards they could have captured. Use credit cards for all spending, pay the full balance monthly, collect the rewards. Free money for behavior that doesn't change. Mistake 12, insuring things that aren't catastrophic. You have insurance on your phone, your laptop, your appliances, your rental car. Insurance exists to protect against losses you can't absorb. A $600 phone replacement isn't catastrophic. You're paying premiums that exceed the expected value of claims. Self-insure small risks. Only insure true catastrophes like health, disability, and liability. Mistake 13, letting raises disappear into lifestyle. You got a 10% raise. Your rent increased, your car upgraded, your restaurants got nicer. The raise vanished and your savings rate stayed flat. This is lifestyle inflation, the silent killer of wealth building. When income increases, lifestyle should stay stable and savings should absorb the difference. Lock in your pre-raise lifestyle. Bank everything above it. Mistake 14, not maxing tax-advantaged space. You contribute to your 401k but not your Roth IRA. You're leaving tax-free growth on the table. You can contribute up to $7,500 annually to a Roth in 2026. Money that grows completely tax-free forever. Prioritize maxing these accounts before investing in taxable accounts. The tax savings compound into tens of thousands over decades. Mistake 15, paying for convenience you don't value. Food delivery fees, expedited shipping, premium gas. Your car doesn't require bottled water when tap is identical. Convenience has a price. Sometimes it's worth it. Often it's not. Audit where you're paying extra for speed or ease that doesn't actually improve your life. Redirect that money to things that matter. Mistake 16, not having adequate insurance. You skip disability insurance because you're young and healthy. Statistically, you're more likely to become disabled than die before 65. Without income protection, one accident destroys everything you've built. Disability insurance, term life insurance if anyone depends on your income, adequate liability coverage. These aren't optional. They're the foundation that protects everything else. Mistake 17, emotional spending after bad days. Rough day at work means dinner out. Stressful week means online shopping. Boredom means browsing and buying. You're using purchases to regulate emotions. It works temporarily and costs permanently. The average person spends over $1,000 annually on emotional purchases they regret within weeks. Find free coping mechanisms. Spending isn't therapy. Mistake 18, not reviewing and lowering fixed expenses annually. Your car insurance renews automatically. Your internet bill stays the same. Your phone plan hasn't changed in years. Companies raise prices slowly, hoping you won't notice. Competitors offer better deals to new customers. Call annually. Negotiate. Switch if needed. 30 minutes of calls can save hundreds annually on expenses you're paying regardless. Mistake 19, keeping too much cash for too long. You're saving for a house down payment in 3 years. All the money sits in checking, earning nothing. Anything beyond 6 months out should be invested conservatively. Even a bond fund or high-yield savings beats zero return. Inflation guaranteed erodes cash. Give your money time to work even on medium-term goals. Mistake 20, not learning how money actually works. This is the meta mistake that enables all the others. You're making financial decisions based on assumptions, advice from people who aren't wealthy, and systems you inherited without questioning. Nobody taught you how compound interest works, how taxes affect investment returns, how to structure accounts for maximum growth. That ignorance costs 6 figures over a lifetime. Every mistake on this list is fixable. Most take less than an hour to correct. The difference between where you are and where you could be isn't effort. It's awareness. Now you're aware, fix them.